The UK is facing its worst slump in 300 years. A strict lockdown put in place at the end of March has hit nearly every sector. Restaurants are closed, car sales have come to a halt, and millions of workers have been furloughed. The Bank of England has warned it may not get any better this year. It estimates the British economy will shrink 14% this year, with a contraction of 25% in the second quarter. Unemployment is expected to double to 9% in the same period. A sign the economy needs all the help it can get. But the central bank has decided to hold off on new stimulus measures. It's left bond buying targets unchanged at $800 billion and rates at a record low of 0.1%. Governor Andrew Bailey, however, left the door open to act if necessary.
However the economic outlook evolves, the bank will act as necessary to deliver the monetary and financial stability that are essential for long-term prosperity and meet the needs of the people. This is our total and unwavering commitment.
The bank says it will re-evaluate borrowing needs once it knows how the government aims to lift the lockdown. That could happen as early as next week. Prime Minister Boris Johnson will set out a detailed three-stage plan on Sunday and has warned any easing of measures needs to be managed properly.
We'll want, if we possibly can, to get going with some of these measures on Monday. It would be an economic disaster for this country if we were to pursue a relaxation of these measures now in such a way as to trigger a second spike.
The UK already ranks second globally in infections. Another wave of the virus would also mean a second wave of financial distress. And that would make the Bank of England's forecast of an economic recovery next year an unlikely prospect. Sibel Karkus, TRT World.
Well, for more on this, Yael Selfin joins us now from London. She's Chief Economist at Kpmg. Welcome back to the program, Yael. So the Bank of England reporting the sharpest contracting or predicting the sharpest contraction since 1706, some 30% this summer, 14% for 2020. What do you make of these numbers? Was this worse than you thought?
Well, for a start, it is very much a scenario rather than a forecast that the Bank of England issued today. And it was very much to give an illustration of what the outcome is going to be this year. The assumptions that were made were fairly generous on some part and a little bit too strict on the other. So I think overall, we could see a slightly milder contraction this year compared to what the Bank of England is forecasting, but the recovery could also potentially be a little bit weaker on the back of that.
Yes, because the Bank of England governor did suggest that perhaps the recovery could be quite rapid. When would you expect this to turn around?
Well, for a start, we're not really expecting anything to go back to anything resembling normality until we have a vaccine or some sort of a medical solution that would make this pandemic much less lethal than it is now and would render all the social distancing measures obsolete and would encourage people to go back to normal. And that is unlikely to happen before January or even July next year, which means that a proper recovery is unlikely to happen until sometime next year.
Now, we know the government has unleashed a range of stimulus measures, mainly in the form of distributing handouts to people who've lost incomes. But what has the Bank of England done in response to this crisis?
Well, the Bank of England has done a number of things. For a start, it lowered interest rates, but it's also announced a number of loan schemes that are going to help businesses access funding. But really, the key here are two things that need to be done. One is primarily find a vaccine, improve testing, and try and minimize the need for social distances. All of that is very much for the government to do. The other thing is in terms of fiscal support, we've seen the job retention scheme in the UK. This is very important in the sense that it would limit the number of unemployed people, at least in the short term. So that's a very crucial part of the support. And we've also seen a number of other, numerous measures overall that have been announced so far, both by the Bank of England and by the government, with the government really taking the lead, which makes sense because the government has more tools. This is more of a fiscal package that we would expect rather than a monetary package.
Yes, in any other circumstance, the idea of subsidising a worker's lost wages would seem anti what many in the Conservative Party would stand for. But do you think that that particular policy measure was needed in this case?
So I think in the long term, you probably don't want to do that because it's very rigid and it discourages workers from looking for other jobs, potentially, even though the Bank of England today said that they thought that they were assuming that workers were still looking. But in the short term, given that we've got the lockdown at the moment and more than a third of the economy is at a standstill, this is a very important measure to make sure that we don't have excess casualties on the back of it. And we're trying to preserve as much of the productive capacity of the economy intact. So that was good for the short term. The big question is what happens after the end of June when that scheme is likely to be wound down. And also, we need to bear in mind that labor costs are only just one part of costs that businesses are facing. They also face rent, etc. So that is not necessarily going to keep them alive, if you like, for the medium term.
Okay, Yael Selfin from Kpmg in London, we appreciate your analysis. Thank you.
Thank you.